Good morning. Welcome to the Finance Committee of the Lextran Board of Directors. It is September 25th, 2023, and I'm going to turn the meeting over to our chair, George Ward.
Good morning, all. Our first order of business today is to approve the minutes from our April 14th meeting. Jamie, you have a big responsibility today.
Move to approve.
And I guess I need to second it. So, motion made and seconded. All in favor, aye.
Aye.
And no opposed, so that motion passes. Brad Shelley, right? Is that how you pronounce your last name?
Yep.
Is here with us today from Crow, and he will be going through the Transit Authority audit report for the fiscal year that ended, what, June 30th?
June 30th.
June 30, 2023. So Brad, I'll turn it over to you.
All right, thank you. Glad to be with you all this morning, and we'll go through these financial statements today. We have a couple other reports, but the bulk of it's going to be through the financial statements. So skip ahead a couple pages here. So the report really starts with the independent auditor's report. This is our report to the board of directors. The format of this is similar to the couple of previous years. Starts out with the opinion, which is really what you're looking for here. We are providing an unmodified opinion on your financial statements, which is the highest level of assurance we can provide. Essentially, that means that the financial statements are free of material misstatements. From here, it just goes into some other information, responsibilities of management, which are for the financial statements themselves. So we assist in the preparation, but they're ultimately the responsibility of management. And then our responsibilities are on the second page. Again, nothing's really changed here. Our responsibilities is to provide an audit, perform testing, and then provide an opinion. We do have some information about this required supplementary information that's listed here. So there's a number of pension-related schedules that are included in the financial statements. And so those are listed here. We are not providing any opinion or assurance on those schedules. We do tie those out to supporting documentation, but we're not doing actual audit testing over those schedules. And then the last couple of paragraphs here, supplementary information. This, again, is related to some of the schedules in the back of the financial statements. So these are the combining statement of net position and combining statement of revenues and expenses and changes in net position. Again, just additional information. On these, we are providing in relation to opinion, which means in relation to the overall financial statements that are free of material misstatements. The last paragraph is related to government auditing standards. We are a governmental agency. You do report under government auditing standards, and you do have that requirement because you do spend federal dollars. And we'll get into those reports in a little bit. From here, jumps into management's discussion and analysis, or MD&A. This just gives you an overview of the activities and gives you some comparative information. So these are single year presentation financial statements for the year ended June 30, 2023. But what the MD&A does is gives a little bit more context to those numbers. This is all unaudited information. So again, the numbers are audited. But any of the context, the explanations for variances, et cetera, those are all unaudited. And that's common.
I wanted to make one comment on the passenger trips.
Mm-hmm.
And a lot of this is obviously recovery from COVID, but you have a 25-26% increase in number of passengers with virtually no increase in revenue hours or additional service. So it's good to see that we're getting back to where we need to be on ridership.
Yep. Great point. I won't spend a ton of time going through here because we'll look through the financial statements in a little bit more detail once we get to those. But again, you can see some positive trends here. You see your total assets and deferred outflows of resources increased about 8%, up to about 86 million. As you look to the next page here, your liabilities and deferred inflows actually decreased a good amount. That's related to the new market tax credit deal, and that all closing up this year, so that debt, some of that debt or all that debt being forgiven. So that's the main change on the liability side. And then that impact obviously flows through your financial statements, to the income statement, and then ultimately to your net position. So you see an increase in your net position of about $21 million. So again, positive changes there. As you look at your capital activity, some increases there, primarily in a couple of different areas. You see paratransit vehicles, some additions, 471,000. Obviously, a bus and charger purchases pretty much every year, about 2.4 this year. Some additional expenses as well. At the bottom of the page goes into more detail of the capital assets and the changes year over year. As you can see, the $3.2 million increases, and that was most of the activity. So you don't see a lot else there. Skip ahead a couple of pages here. So the top of page 9, your summary of operations and changes in net position. So you can see, again, some positive trends, an increase in the operating revenue, as George pointed out, the increase in ridership. So you have an increase in revenue there of about $420,000 or 11%. Expenses obviously increased as well, though. So as you provide more service, you do have more expenses associated with that. So some expenses running through there. That takes you down, all the way down to your change in net position of $21 million this year.
So that property taxes, that percentage increase is higher than what we were expecting by like double, right?
Mm-hmm. We're expecting 3.
It's closer to 7-ish, I think.
Where you see the biggest change here is you look at the revenue side of things on the federal assistance, as you had some federal, I think some COVID dollars that you were using this year. So that was a significant increase. And then you did have a gain from the new market tax credit deal, and that closing up, that deal, or that gain was about $3.9 million. So that was really just a book gain. I mean, that wasn't additional cash that's coming in, whereas the federal assistance, that was actually more dollars coming in the door. So look on the expenses side, you'll see the biggest changes where you'd expect in operations, about a $4 million increase there, about a 23% increase. So maintenance costs increases, general administrative, et cetera. So again, pretty standard to see some increases in there as you continue to increase operations and continue to have more riders coming back.
So in the operations, the $4 million, how much of that is paratransit?
Almost all of it.
Yeah.
Mm-hmm.
Just wanted everyone to realize that.
Mm-hmm.
And then on the total expenses, that's a pretty big percentage increase for year over year.
Yeah.
On which one, George?
Total expenses, it's like a 19% increase or so.
Yeah, and as noted here, that's a combination of things. That's rising diesel fuel costs, wages increases, paratransit contract, et cetera. From here, this gets into the basic financial statements. We talked about this a little bit here as we went through the MD&A in a comparison, so I won't go through here and spend a lot of time. From an accounting standard, this is probably a good time to discuss. From an accounting standard standpoint, nothing really new this year that impacted Lextran. So the larger ones that were implemented this year were GASB 94 and GASB 96. GASB 94 is around public-private partnerships and APAs. Management evaluated that, determined it didn't have any. And then GASB 96 is SPIDAs, or subscription-based information technology arrangements. So those are kind of, think like cloud computing, software agreements, et cetera, that extend out into multiple years. And so again, management evaluated that, and nothing that was material was identified, so nothing was recorded there for those transactions. So,
I have a question.
sure.
For you, Nikki.
Mhm.
Of the cash that we have, how much is considered future capital expenditure reserve?
I'd have to look at the capital plan.
Okay,
I'll look at that and let you know.
okay.
So again, at a high level, $86 million in total assets and deferred outflows. That's primarily in cash of $38 million, and then capital assets of about $32 million. On the income statement side, again, we talked through this, positive change in that position of $21 million. We talked about some of the expenses and variations there year over year. In your, sorry, do you have a question?
So what page you're on. I have one other question, probably goes back to the previous page, but
Yeah.
how much more federal assistance do we have to collect?
With the COVID money, we only have about 600,000 left.
And that's where most everyone, I mean, at this point, everyone has pretty much spent all of that dollars, unless you're getting extensions on those or something along those lines, so.
Yeah, we'll draw down the final amount in October.
Okay.
And some of the recent grants we have been winning have really been around replacement of vehicles, the low, no emission. You
Yes.
can't, it's not necessarily going to the operating.
Yes, we have, almost everything is going for bus replacement, and then we have the CNG facility upgrade. So, but most of it's bus replacement.
And you'll still have preventative maintenance grants moving forward, and this won't be at the level of the COVID grants that you had previously. Statement of cash flows, I won't spend a ton of time here. If you kind of look at the upper half of this gives you kind of this summarized version of information. So you have a net cash outflow related to operating activities, according to, from a GASB standpoint. Then you have your non-capital financing, which is really the other subsidies that are helping to pay for some of that fair revenue that you can't collect. You're instead getting it through federal assistance, through property taxes, et cetera. So $42 million coming in there to offset that outflow of cash. And then from a capital standpoint, fairly minimal amount in outflow, about $1.8 million this year. As we look at your fiduciary fund, so this is the pension fund, you'll see about $17.6 million in assets here. No liabilities, it's pretty much entirely in investments and cash. You can see the plan activity during the year, contributions of $800,000. The investments actually had losses this year, and this is as of the plan year end, so this is as of December 31st, 2022. So if you're trying to kind of compare to market, you got to go back and look at calendar year 2022 if you want to compare that. And then benefit payments of about $800,000. So your contributions pretty much cover your benefit payments plans. Notes to the financial statements here. I'll go through these fairly quickly unless you have questions, so feel free to stop me. So note 1 is just going through some of the background information of Lextran and significant accounting policies, and really nothing new in here this year. As I mentioned, there were no new GASBs that had any kind of significant impact, so you don't really see any new footnote disclosures related to that, any new accounting policies. The only thing that is modified here is in the middle of page 21, where it mentions the new accounting pronouncements. And we talked about GASB 94 and 96. There were also 91 and 99, but those had no impact either. Those are lesser impact GASBs. Note 2 goes through your cash and cash equivalents and outlines some required information there. Nothing has really changed significantly Note 3, we already looked at this similar schedule in the MD&A, so I won't go through this, but this is the roll forward of activity for capital assets during the year. Note 4 is a footnote around fuel costs and diesel fuel. This has been a standard disclosure that's been included in here. Nothing really has changed from this standpoint. It's more that there's just a disclosure noting that, you know, fuel costs change, right? They vary year to year, and those could have negative consequences over time. Note 5, I think, was modified last year as GASB 87 was implemented. Really didn't have any impact last year, and so you don't see any significant disclosures here. The most significant lease is related to your tires for the buses, and tire leases are specifically excluded from GASB 87, so no requirement to include those as a lease asset or liability. Note 6 discloses the notes payable. Again, this was related to the new market tax credit transaction from several years ago in fiscal year 2023, so almost, it's been over a calendar year at this point. It was July 22 when the options related to those were exercised and the transaction fully rolled up. So the notes were forgiven, and that's what you're seeing here is the $12.6 million was forgiven and now has a balance of 0. As I mentioned earlier, that had a net impact of a $3.9 million gain that was a non-cash transaction, so just a book gain. The other thing to point out here, just as a note, it mentions here in the last sentence that Lextran Real Properties and the Foundation, neither one have any assets or liabilities. I think those still technically exist. You haven't closed those entities up legally, but there are no assets or liabilities, no other transactions related to those at this point. Note 7 discloses the investments in the fiduciary fund, your pension plan, and the fair value disclosures here. So your U.S. government obligations and corporate bonds are level 2 investments. What that means is those are just not traded on a daily basis. The ones that are in level 1, those are publicly traded on a daily basis on an exchange. Nothing significant there. Again, just some additional required footnote disclosures around various types of risks.
Is our investment policy for the fiduciary fund similar to what you see at other transit agencies?
Yes.
Yeah. Identical-ish?
I mean, they all vary a little bit, but I would say that the types of investments that you have here and the mix is pretty similar to what we'd see. Yeah.
Thank you.
Again, this continues on. This is just looking at your U.S. government obligations and your corporate bonds and some required disclosures around maturity dates of some of those obligations. Note 8 gets into more of the details of the pension plan, and let's skip ahead a few pages here. So this gives some information on some of the assumptions that go into this. So your discount rate of 6%, your rate of return, and really this is your allocations as you're looking at how those investments are allocated, 35% to fixed income, 60% to equity, and then 5% to cash. Generally, that's pretty similar to what we'd see. I mean, there are some modifications. Some plans do allow for more, different types. But for the most part, when you're on the government side, you're seeing a lot of domestic fixed income and equity.
And then pause, Nikki, when it says inactive employees entitled but not yet receiving benefits, 99, does that mean they're not yet?
They're not old enough. Maybe.
Yeah, they're not old enough. They've left Lextran after they're fully vested, but they're not old enough to start receiving.
On page 28, this gives you a good breakdown of your net pension asset, and that in itself is something to note. I'd say the majority of plans aren't in an asset position, they're typically in a liability position. So that's obviously a positive. I'd say, it's not a requirement, so I don't get too concerned about entities that are in a liability position unless you are zero funded or pretty low funded. But to be in an asset position, obviously it puts the organization in a good position. You have a little bit less to worry about making future contributions to try to catch up and pay off that liability over time. So to be in an asset position is a positive. And as you can see here, this is the overall changes. Now again, this is a year in arrears. So I think what you're seeing as we look at the fiduciary fund, that is as of 12/31/22. This, I believe, is looking at a year in arrears from an investment activity, from an actuarial standpoint. So that's why you're seeing here a net investment income flowing through as a positive. Actually, I say that backwards because this is an asset, so in a negative. So this is your current year. Sorry, this is the net investment loss of $2.5 million. So that does decrease your net asset down to $620,000 this year. This last paragraph is always interesting just to look at the discount rate and how that impacts. As I mentioned, that discount rate is at 6% currently. That's something you'll have to continue to keep an eye on, especially as rates change. But a 1% swing either way has a pretty significant impact, as you can see. So 1% decrease takes you down to a net pension liability. A 1% increase moves it up to about $2.4 million. This is just information about your deferred inflows and outflows, and really these are all just mostly assumption related and types of impacts that are spread out. So the impact on experience, the impact on your changes in assumptions, the changes between the projected investments, earnings, and the actual earnings. Those are things that are all spread over a period of time, typically over a 5-year period. And so rather than seeing that impact all in one year, that's spread, and those amounts are included in the deferred inflows and outflows, and will be recognized through the net pension asset or potentially liability over that period of time. So that's what this is showing. This is currently how those deferred inflows and outflows would be recognized over the next 5 years. The bottom of the page discloses your 401A defined contribution plan and the contributions made to that plan. Note 9 discloses your new market tax credits and the transactions related to that. Again, this was all rolled up, so after this year, I would expect this footnote would go away. But for this year, because the transaction rolled up in July of 22 during the fiscal year, we included all this information for historical purposes. The bottom of page 31, this this footnote's not quite as useful at this point. Condensed information of the different entities, again, zero activity. So I think, again, as we move forward after this year, we'd see this footnote disclosure go away. Those entities likely will continue to exist legally, but won't likely have any balances. So we'll just note that within probably note 1 of the financial statements. Here you can see the income statement activity. So there was obviously activity this year as the transaction was rolled up. Going forward, there'll be zero activity.
We have begun conversations with the attorney who helped us set them up originally to dissolve those entities.
Okay. These next couple schedules are the required supplementary information schedules I mentioned previously, relate to the pension plan. Nothing really too exciting to point out in here. This will be eventually a 10-year schedule, which is what's required by the accounting standards. This is also related to the pension plan, and again, a 10-year schedule of the rate of return or losses each year. The combining statements of net position and the combining statements of revenues, expenses, and changes in net position. And then we get into the portion of the financial statements related to your federal grants, so your single audit.
Can I pause before we go to
Yeah.
39? So, and I know we have a pension board that looks at this. So if I'm reading this, it lost 12% this year,
Yes.
and that's common. Is that what most pension boards saw this year?
Yes, in our meetings, we have quarterly meetings. We have an investment firm, Mariner Wealth Advisors, and we have an actuary, Steve Osborne, and they review this very closely. And they said this is pretty normal for last year, to see it go up and down. So, especially with the way the economy has been, so things are looking a little better for 2023.
Okay. I know we have a group that keeps their eyes on it, but I had just never seen these numbers. Seems like a significant loss. But
Yes,
It was, yeah, it was a bad year for the market.
yes, very bad.
This is your schedule of expenditures of federal awards, which is just disclosing the federal grant dollars that you spent during the year. So about $23.8 million. Almost all of that's related to the federal transit cluster. And so while these are all individual different grants from the standpoint of testing and from the presentation standpoint, they're all grouped together as part of this federal transit cluster. So when we're doing our testing, we're testing samples from each of these grants. We did not perform any testing over these 3 grants at the bottom with smaller amounts. That was not required. And so as you look through here, this is where you'll see obviously the $13.7 million is COVID-19 dollars. That's the grant that Nikki was talking about, that you have about $600,000 left on, that you'll receive in FY24. So there are 2 reports related to the single audit. The first one is in accordance with government auditing standards, and this is looking at your financial statements as a whole, including your CFA. Again, this is where we disclose any material weaknesses or significant deficiencies, and we did not have any to report, and no issues of any non-compliance noted. So positive there. And then the second report is required by uniform guidance, and this is over the major federal program that we tested, which again is the federal transit cluster. Here, again, we had no issues, no non-compliance, and no material weaknesses or significant deficiencies to report. So a clean audit from a federal standpoint. And that's really summarized here. Everything is here on the right-hand side. We are issuing an unmodified opinion related to the major program, and the major program is Federal Transit Cluster. We do qualify as a low-risk auditee, which is obviously good, and no other findings to report. So that's it for the financial statements. Any other questions on those before we go to the couple of letters we have? How do I go to the letters from here?
So that was a separate email that I sent. Sorry, that was my fault.
No, it's okay.
And while he
I was trying to scroll and it wasn't going anywhere.
It would be in an email. It came, the packet went out, and then the day later, the letters went out. I'm sorry.
And while he's open that, I'll give, so in general, our expenses are increasing while our revenue is decreasing because we're losing the federal grants. Like big picture. So while we sit on a decent cash flow at the moment, the trajectory over time is something to keep our eyes on.
Correct.
Absolutely.
Right.
And I was gonna make a comment on that in a little bit, but we'll do it now while we're changing. So, Nikki, how much total COVID money did we end up getting?
So one grant was 14, so we had a total of 20, it's almost $30 million.
Yeah, so if we had not received that, our cash balance would be $8 million right now. And we're losing 3 to 4 million a year on paratransit right now. So we would have been in a position where we had 3 years left of cash. And so one of the things that I wanted to bring up is the fact that we need to at least look at contingencies, because in the position we're in right now, we've got, I don't know, 10 to 12 years left of cash if we don't do anything. And if the revenue trends somewhat stay the same. Now, property tax, I mean, maybe that continues to increase a little more than what we anticipated. And I just wrote down some risk contingencies, and don't take anything from the statement, because this is purely a risk contingency. I have no other knowledge, okay? But what would happen if you lost the UK contract? So, I mean, there's obviously
That's $4 million.
there's a lot of income. You'd save some expenses, I guess, but you know that would be an issue. And then, you know, what happens if paratransit doubles as people keep getting older? And so, as Jamie said, I mean, these are things we need to keep our eye on, and we really need to understand that cash number is a big number today, but in a few years, it's not going to be a big number anymore.
Right. Correct.
So we have to really be careful.
Yes.
I think from a industry standpoint, that's common sentiment, right? It's long-term planning, in some cases, short-term planning. I mean, depending, there's transit agencies who are going to be struggling potentially within the next year to 2 years as the COVID money runs out and ridership hasn't came back as much, and they were heavily relying on fare revenues, and now they're not having those. So I think your points are valid and good, and those are the types of things you need to be thinking about. Is, yeah, we have lots of cash right now, but that doesn't mean we're going to continue to have $20 million positive change in that position every year. That's not going to happen, most likely, unless some new dollars come in out of the blue. So I think it's important to look at, hey, we have this, how do we plan to utilize this over a period of time? What do we need to be doing from an operational standpoint over the next 5 years, 10 years?
And we did budget for some strategic planning efforts. Was that this year or no? In this year's budget, so not the budget that we're looking at.
We did, yeah, in the 5-year capital plan, we budgeted for another COA in a few years, things like that.
But as Brad was saying, this is something that I think the industry is experiencing. So we did get funding to take us through maybe 27. We do need to start taking a closer look at how we're going to sustain ourselves after that, and really monitor our paratransit services to make sure that we're on top of that before it gets ahead of us. So.
And so the reason I'm asking when our next planning is because at some point we either have to talk about reducing services or increasing revenue. And at what point do we do that?
Right. Yeah, that's something that's definitely going to have to be part of the conversation sometime soon.
Yeah, just so you know, Norma, at these meetings, not everyone, but maybe every other one, Nikki does a 5-year out projection.
Okay.
And so we keep a pretty close eye on where the cash is going to be.
Okay. Good.
All right, so real quick, couple of letters here. And I don't, is this, are you sharing this screen?
Which one do you want first?
It doesn't, either one is fine. That one's fine. So this is the management letter. This is a one-page document just noting no material weaknesses or significant deficiencies. Typically, you don't get as many requests for this on the government side, but we provide this nonetheless in case someone asks for a management letter. And then if you want to go to the other letter now. This is what we refer to as the SAS 114 or Audit Communications Letter. Just goes through a variety of information. Again, some of our responsibilities as auditors. We do communicate that we are independent from Lextran, which is important. Otherwise, we wouldn't be able to provide an independent auditor's report. Mentioned some of our planning, and the scope of that, some of the accounting policies, and so again, the accounting standards, these were technically implemented but didn't have any impact. We did list this one significant unusual transaction related to the new market tax credits. No issues there, just obviously something that you don't have on a regular basis, so that's disclosed there, and the impact of that is disclosed. On page 3, you do have a few accounting estimates that go into this, and a lot of this we've talked through as we went through the financial statements, but allowance of doubtful accounts or receivable balances, and you don't really have any significant allowances there. Fair value of investments or pension-related transactions, there's a lot of assumption estimates that goes into that, and then the useful lives of capital assets. The bottom part of this, page 3, this is where we would just disclose if there were any kind of issues in how the financial statements were prepared, any inconsistencies, and how you're applying certain accounting treatments, etc. We don't have anything to report there. At the top of page 4, corrected and uncorrected misstatements. This is where we would include any audit adjustments, and so corrected would be audit adjustments that we proposed to management and they posted. Uncorrected misstatements would be those that we proposed to management but they chose not to post because they weren't significant or material. We didn't have either of those, so again, very clean audit process this year. And then the last section is other communications, and this is just a variety of information. So if we had any significant difficulties or disagreements, other kind of issues, those would be reported here. We likely would have already talked to you if we did have those. We're not aware of any other consultations with other accountants. And the only thing that does have an affirmative response here is the representations. The auditor's requesting from management. That's something that we request every year. So that'll be, as we finalize these financial statements, we'll ask for a representation letter that just goes through a variety of information, essentially stating that management's given us all the information requested, disclosed all significant transactions, etc. So nothing else to report here. So again, very clean audit process overall. Nikki and Stephanie always do a great job of being prepared for the audit and have everything ready for us. We talk about new accounting standards and changes throughout the year as they come up. And fortunately, we haven't had too many significant ones lately to talk through, and I think next year will be similar. Nothing major on the horizon from a GASB standpoint, but I know they stay on top of those and ask questions if something comes up that they're not sure about. But they typically do a really good job with that, so appreciate their assistance and allowing us to get through the audit process smoothly. Any other questions for me?
I just want to make a comment. The strategic plan is in the Transdev contract, and there is a long-range plan that is budgeted in this year's fiscal year budget.
Yeah, I thought we had
Yeah.
budget. I remember talking to Jill about that.
It's part of the Transdev contract, that's why I couldn't.
Yeah.
Yeah. Okay.
And then when will that start?
Well, we'll find out, and let me see if I can
No,
get
not to throw that question, but I remember that budgeting for that this year was, part of that was to have these discussions. But knowing that we have got a lot of changes happening, I'm assuming it would happen after there's a permanent
Yes.
general manager. Anything else, Brad, you're seeing from the industry that we should be keeping an eye out besides some of the things we've already talked about?
No, I mean, I think that's the biggest thing that I hear in talking with others. And the other issue that I hear commonly is just staffing, right? Whether it's from a management and administrative standpoint, some entities are dealing with either turnover or not being able to find people. Operators especially has been an issue, I think, for most transit agencies. So those continue to be the biggest things. And I mean, really the biggest thing is what we talked about earlier, is just looking at that. If you read any kind of articles, I mean, there's plenty of articles talking about fiscal cliff and some larger agencies that may be looking at that and having to modify operations pretty significantly to try to cut costs. So there's a lot of uncertainty in that area, but that seems to be the biggest thing at this point.
And our formula funds that we receive every year, the percentage has gone up slightly,
Yes.
but with the passage of IIJA.
Right, with the last passage of the bill, and I think it takes us through 27. I'm just not, how it impacts this
Yes.
system, but there is an increase in funding in the formula funds. And it's been a significant increase for some agencies. I just need to go back and check on this one.
Yeah, I don't recall for Lextran what that looks like, but yeah.
What's our impact from a government shutdown?
With our cash flow, we're good right now.
Yeah.
We, about the only thing right now that we need to draw down, those 7 CNG buses, and then some of our preventive maintenance, but that will be fine.
Yeah, that funding is already in place, so funding that's already in place won't be impacted. It'll be, well, right.
It won't be shut down forever,
Yeah,
No, that's true.
exactly.
if it shuts down at all.
We're good right now.
Mhm.
But I think I saw, like with IJs, it was somewhere between like a 15 to 18% increase in the formula funds.
Mhm.
So let's say in 2027 it goes back, or the change in administration, it goes back to
Yeah.
the original amount. We're looking at, even in our formula funds, not our COVID funding,
Right.
a smaller dollar amount.
Yes.
And part of the formula funds, that giant formula that they use, part of that's census, and so they'll be using the 2020 census instead of 2010. So we're interested to see how that affects it also.
Mhm.
Because comparatively, Lexington is not growing as fast as other cities our size, so other cities are gonna see a larger increase if it is based on the census
Yeah,
in their funding,
possibly.
possibly. Just,
Right.
we're growing at like a 2 to 3%,
We
and other
actually,
major
we shrunk them last year.
cities are growing faster.
Yeah. Well, the population does have an impact, so.
Yeah.
Dr. Acampo, do you have any comments or questions?
Well, I'm always proud of Nikki's work, so again, once again, kudos to you, Nikki.
Thank you very
For
much.
always doing such a,
Thank you. We have an excellent team.
Yes.
You sure do.
thank you.
All right, so anything else for Brad? And I was gonna echo Dr. Acampo's comments, Nikki, Stephanie, and everybody that puts this together. And Norma, just so you know, this is typical of every year.
Thank you.
It comes out, clean, we follow the rules, we know what the money is. The three of us on this committee
Mhm.
paid pretty close attention to the financials, and thank you.
Yeah.
Thank you.
Nikki has a great, Nikki and her team are doing a great job, and I mean, I've been totally impressed with all the staff here.
Yeah,
So
they are really
everybody's
good.
doing a great job.
Okay, so what's on the agenda? Old business and new business?
Oh, business.
Yes.
Old business.
Nothing I know of unless you have something.
No, I don't have anything to bring up other than, you know, a 5-year projection next time.
Okay, will do.
And with that, we can adjourn. So thank you, everybody. Brad, thanks for coming in.
Thank you.
Thank you.